90% of the time, markets do this on quadruple witching events, and it's here for this Friday. Trillions of dollars at stake, maximum pain on the line, and a lot of dark pool liquidity going through. Hello, ladies and gentlemen, and welcome back to the Daily Show. We discuss stocks, commodities, and cryptos together. US retail sales were hot, and they came in super hot across the board, but it was mostly due to rising energy prices. At the same time, ARM stock also was on fire, 25% on the public debut. But if you've been watching the channel for a while, we all know how these IPOs go. We'll talk more about that later in today's show. So with so much on the line and, of course, gap fills being completed over the last 24 hours, what happens next for the S&P 500, the biggest stock in the world, Apple, and, of course, oil, which everybody's watching? $92 on the way? Let's talk about it right now together. Well, welcome back, everybody, to the Daily Show. We discuss markets around the world. It was a sea of green after a very hot core retail sales and PPI result. And basically, you'd think that yields would have been rising, but actually what was happening was inflation-based stocks were doing incredibly well, along with the defensive stock we've got to look at later in today's video. Yes, we've got the rise of defensives again during this rally, and it's really the last point where the bears need to take control of this market. Let's take a look at bullish percent index. Did we see a little bit of an uptick? Yes, we did. And that it could be the beginning of a turn here in this indicator, but unusual because generally speaking, when you get these small ones, they are not the lows. Take a look at the last two times this has happened and what happens afterwards. So, of course, we need to be on high alert into this Friday options expiration. This is quadruple witching, and what it means is that we have basically stock index options, stock index futures, and single stock futures all expiring at the same time. It happens once every quarter, and there's a lot of money on the line. It's usually in the trillions, and it is this time again. We also know that probabilities are starting to turn, and we're going from peak Treasury spread predictions of recession, and we're starting to go back down. Now, this is where you've got to start getting a little bit careful. Of course, recessions only tend to happen when nobody expects them. So what you're really looking for is the spread between the 10-year and the 3-month bill rate to uninvert. Take a look where we are right now. We'll look at this later on the chart. Some interesting stuff getting very, very close here on the horizon. Let's talk about Friday now. So the stats, as we mentioned, the last 11 times that we've seen an options expiration in September on the Friday during the OPEX event, we've had negative days. Now, we are set up for the almost perfect technical analysis for both a bull bust up or a bear bust down. So we are literally at neutral level on the S&P 500 after that gap fill. The stats would say that this kicks off the weakness. Usually we see weakness on Friday, and that stretches over to post-OPEX week, which actually has some very strong stats towards negatives with it. This week usually does end positive. It looks like even if we sold off 100 points on Friday, we're pretty much going to still see a very positive event. But do remember, this is all in line with everything we've been talking about. 34 up, 16 down over the last 50 years, 17 up, 33 down in the next week after the OPEX. So keep on top of the stats, but as always, let price action dictate your way. Even though we have data, it doesn't mean it's going to repeat. Generally speaking, we do see weakness into the back of September. That happens usually at this point. So in terms of trading days, it all makes sense and we're at the right level. All right, well, let's now take a look at everything to do with dark pool transactions and big, large transactions on the street. First up, we've got the financials. There seems to be a large transaction going through what has been resistance in the past. It's fair to assume that at this stage, it could still be selling. Although if we make a new high, it's more than likely a big buy that's trying to push through that market volume. Now, this is where things get a little bit annoying. A late report came in with 2 massive transactions on it for the Qs. Would have been nice to have that over the last 24 hours, but we didn't. And unfortunately, that meant that we didn't know that there was some large trade that was going to come in for that big bull run that we had. We had a suspicion that markets were trying to squeeze out everybody that's been going short on puts. And of course, why was that? Well, we had a really bad inflation number, theoretically, and core retail sales were pretty hot. So you would think that's higher for longer on yields, which we'll look at later on. 2 large trades, but where things do get interesting is at least we now have a big print coming through on Ultra Pro short triple Qs. Now, this could be in line with a quick trade, which could, of course, be Friday into next week. And if this does end up being correct and the market starts to short, so obviously S triple Q goes up, then we're looking at when do we see another large transaction. Possibly exit liquidity will be something we'll look at next week. Certainly on top of that, we'll bring you everything in terms of updates as they do occur. What's going on with Amazon? Lots of trades going on at this peak, 2 big ones now. Will this be distribution? It kind of makes some sense, but then there are also some arguments to be said. Well, usually we rally into something like Black Friday. So a very important point for Amazon. I could see weakness initially into some strength later on for the October run that it tends to have. Let's move over to global uranium. Now, everyone's on top of this one, and this actually could be a big accumulation. It was a monster move, but take a look at this. We've had huge trades going through, and we just got the biggest trade on global uranium after that huge rally that just happened. I think it's probably a profit take, and that's because it's gone up basically, almost 50% in the last couple of weeks. So good moves there on uranium. A few of the people in the community have been on top of that. It's been in line with a lot of other things we've been doing as well, being metals, iron ore, those types of things as well. Let's now move over to options. What's going on in the unusual world of options? Well, of course, it was a fairly big day of options, though Friday will be even bigger. 39 million versus a standard kind of 39, and 52% calls versus 48% puts. That's a reversal. So what that means is that there's now more calls in the system coming through on the 0 DTE and also onto the Friday expiration. Let's take a look at some unusual activity. Lockheed Martin coming through with 3.28 times 90-day volume. We also continue to see large trades going through some interesting things. The SPY made up the big one here, 1.07 times normal 90-day, so a little bit bigger into the quad witching. Same with the Qs, same with Apple, and also another one in focus at the moment is Netflix. Will Netflix make a new low? If it does, it could get kind of nasty for that stock. There's a couple of others in here. Disney also picking up in terms of the amount of transactions going on at these lows, and some great levels to be watching on stocks. Plenty of opportunities, even if markets run away over the next couple of weeks, because there are so many stocks that are still at very good depressed prices. Maybe not the AI stocks, but a lot of others are certainly finding some good levels. So as we've been mentioning, it's really been about metals recently. We've talked about iron ore. We've talked about the idea that metals have been strong, and it continues to play out. Take a look at the last 24 hours here. Utilities as well, doing really well. 1.46% is a strong utilities day. But metals, 3.42%. Breakouts on iron ore really pushed through everything here. And it kind of looks like people are positioning for stagflation. Even GDX had a good session, and we'll talk more about that soon. But let's look at the 5-day roll. Have a look at this. Been a while since we've seen such a combo like this. I don't know if I've ever seen consumer discretionary with metals, with utilities, with a gold. But yeah, that's what's been happening. TAN also may have bottomed. Things like solar stocks are in focus at this stage. But utilities had a monster breakout over the last 24 hours and a very, very strong move through the last session. So could it be that we're moving into a defensive style market? Well, certainly utilities are saying yes. But utilities are only one. Staples and healthcare, while they're doing okay, they're not at the top of the list. But metals have been flying. Let's jump into the charts together. Now, you would have thought with such a strong core retail sales, we might have seen yields go past 5.1% on the 2-year. It just can't do it. Look at this thing. It's just sitting there, not being able to get through. Same thing happened on the US 10-year. It just sits at these highs, long leg doji, still no catalyst to get through there. But what you're looking at the moment is make sure you have something like this on your charts. I'm just going to write it here so we can get the combo up. And make sure you're watching things like 3-month versus 10-year. We want this to go underneath the 1%. And we also want things like US 2-year versus 10-year to go underneath 1%. If that happens, and why I say this is generally this will be actually when you need to be concerned about markets, because it usually means when we uninvert that you're going into either a soft or a hard or some kind of recession. Yeah. So we need to be very, very clear that the most of the time recessions won't happen until you go underneath and you uninvert from the inversion itself. Speaking of yields, though, it wasn't great to have a yield holding up because, of course, it pushed treasuries down. And even though there was a huge transaction there, as we're kind of saying recently, we still think that treasuries can make a new low. And I'm looking for it to make a new low, bust off these levels, and possibly stop around 88 to 90. I'd really like treasuries. A lot of trade going through at the moment on them. Everybody's on top of treasuries, but I would like one last bust if possible. Dow Jones Transportation Average improved on the session, which is a positive, but it really didn't improve that much. So if we go down to something like a 2-hour, it looks a little bit better in terms of the bulls making a move here. But I still think that very, very tough zone here for Dow Jones Transportation Average. If it starts to weaken again and it's weakening while the market's holding up firm or even going up again, I'm not so bullish on the market into a bad seasonal event. The VIX, now this is kind of good news for bears actually. The VIX went really low. New low almost on here, 12.81. So the VIX is super low. It's about to approach that 12.12, which we've had for ages as a set alert level. That is a 2020 low. So where all of this kind of began, where all the madness kind of began, the VVIX or the VIX is going there, and the actual implied volatility underneath, or the volatility of the volatility, it hasn't really been rising either. So it's dropping off after core retail sales and, of course, the inflation numbers. But if it starts to spike again, we'll be on top of that. Let's have a look here. This is probably a good indicator of where the bulls will win and be just completely in control. And I would say the same indication goes off if we go past about 45.40-ish on the market. So if this is breached, I'd say that the bulls have probably won this particular round. It's highly likely that they're moving to a new high and possibly to a new big high. As we mentioned, even if we are going to see weakness here, in pre-election years, we tend to have a really good October, November, and December period. So if September's going to bring the pain, then usually there's a lot to gain into the back end of the year. And we've brought those stats over for months and months and months now on the channel. So here's the percentage of stocks above the 20 moving average. If we make a new high on this, I think that that's going to be the bears giving up, because we've already seen a low here. We've seen a rally. We've seen a drop. And then we're looking for either this as the bears, which is why it's time for them to do it, or it's going to go to a new high. And then we'll have to say, well, okay, it looks like the bears have been smashed again. Speaking of bears getting smashed, you don't want to ever sell an IPO when it comes to technology in the US. Look at this thing. Hype is real, 25% plus on the day. And look, we expect it usually to do something like this. Remember, with IPOs, if you can get in early, oftentimes you do pretty well in the first days into the first weeks. The problem is when you look at all IPOs, I go back through, go and have a look at Twitter, go and have a look at Facebook, go and have a look at Robinhood, go and have a look at Snow, go and have a look at any of them. You'll find out that what happens is they do well for a little bit, then they go horrible. Then in about 18 months' time to 2 years' time, usually that's when you start to go back in. They're getting close to their bottoms. Let's move over to some more positive news, though. Utilities, wow, on top of it. Now, a few people in the community did make mention of this, and I did mention it. Yes, you are correct. Utilities actually hit our alert the day before, and I had it ready for the last video, and I don't know why it wasn't in there. But anyway, utilities broke through, and it's broken through this high now. So there's no real question that we probably bottomed off in utilities for now. This has been a fairly brutal sell in it. They've had a nice pickup here, and I'd be looking for pullbacks into strength. But basically, this movement in utilities is a movement into defensives, and it's been a while since we've seen something like this. So quite strong here on utilities, really nice base low, and I think it's done the V. So it looks like it's turned on a technical stance there. Microsoft, Apple, Google, Meta, Amazon, the Magma, new high, but still pretty weak in terms of not like a strong weekly close or anything like that yet. We'll be watching very closely how Friday closes, because if it closes something like this or a little bit more bullish, then you can't really deny that it looks like Magma wants to go for a new high. So something, again, that's at stake here. What about iron ore? Well, it's been doing really well. A couple of great sessions for iron ore. Vale, BHP, Rio, FMG, doesn't really matter. The ASX 200, as we mentioned, coming down to a small buy area. And yep, it's been driven by materials. And in this case, it's of course metals, things like iron ore doing really well off speculation of China's stimulus coming through. And of course, the CQQQ and other China markets are starting to hold at these key levels, which we've talked about. What about the dollar index? Well, after doing a little rotational sell-off, which of course was due to the contract expiring, then we ended up just filling that gap and going back to the high. Now, if you use a dollar index code, it'll already be on a new high point. But I'm just using the futures here so we can get some trade volume going through. So we're basically at the peak. We could be moving towards 105.64. With such strong retail sales numbers, with such strong economic figures coming out of the US, it kind of points towards higher for longer for yields. and that's usually going to keep these up. Though we did see the Eurozone put through 25 basis points over the last 24 hours. But guess what? You would think that the Eurozone, therefore, should have bought up in terms of euro being strong. Is that what happened? No. And I mentioned this to the private community. What your perception is can sometimes be wrong. You would think that this should be going up. But guess what everyone in retail trade sales land was doing? They were all buying hard. And we could see that on the stats in terms of sentiment. So unfortunately, it was not the day to buy it, even though you thought it might be. The price was packed in, it started selling off, and it just continued in that trend. So just be careful there about our opinions and, of course, the reality of the price action. We've seen that on the stocks this week, and we've also seen it on the currencies this week, or the Forex. Let's move over to gold. What's going on with gold? Well, it's rallied here a little bit, which is surprising. If yields go through 5.1, though, I expect gold to go down. So some people are starting to position for, no doubt, stagflation. Gold does tend to have a weak period over this period of time. So that's the spot, tends to do pretty poorly. And I think that's kind of important. By the way, sorry if my voice is a bit wild today. I've got a little bit of sickness, I think. But anyway, GDX, let's take a look here. We go over to the gold stocks. Now, while spot looks still bad, even though it's got that slight hammer rejection on it, GDX looked a lot better. So as we mentioned, we think the gold stock is undervalued to gold spot at this stage. It is putting in a very strong session for it. I mean, this is exactly what you wanted to see, finally above that kind of yellow line here. And it kind of points towards maybe we've seen a bottoming of gold stock in terms of what's going on. So I think some people will position in here based on stagflation, based on a few other things in the past. What about Tesla? Well, it's probably not doing badly considering oil prices is rocking almost 90 to 90. Well, it is 90 on the US, and of course Brent's even higher. So Tesla doing very well. It does look like it wants to keep running higher. This stock might just defy the odds because, of course, retail traders are super bullish on it again based on Morgan Stanley's upgrade to $400. And if this weekly closes like this, we'd have to expect pullbacks to be met by bull demand. So we got mean reversion. We got within $2, I think, of the first target that we had. And then, $200 was not to be reached this time, it looks like. And at least that's what we're seeing here. Some people will argue that Tesla's about to sell off, but we're still quite a decent gap here at 291. So at this stage, I don't see weakness in it just yet. Amazon, as we mentioned, some large transactions going through. We're back at those highs, so it makes sense someone might try to sell here. But there's no signs of weakness in Amazon just yet. We'll continue to watch the charts and see whether we can see some confirmation of that. What about the biggest stock in the world? Well, Apple had its announcement this week. It came down to the most traded zone, so we were looking for this to be closed below. We've got alerts set underneath 172 if that does happen, because that's going to really show us the canary of the markets and show us weakness is coming. But at this stage, it hasn't happened. So AAPL on demand, on support at this point with buyers. CQQQ is the same. This is something to do. Something's being held here for sure, in my opinion. And of course, technically, we haven't seen a turn yet or anything, but we do know that there was a little island here and we're kind of holding it as best we can. The German market was really strong, and that might have just put in a double bottom. Now, we've been talking about this being a distribution for a while, but this is a very strong level. Of course, once it takes this zone up here, which we have an alert for, then we have to kind of believe that this is in a bullish run. At this point, I don't know. This is supply. So I'm not going to trade the German market at this stage. I think we've had some good trades on it, but at this point, I think it's just very sketchy in terms of both locations. The Australian market looks super bullish. It's really having a good time. Why? Well, it's all got to do with the one thing we're good for. So, of course, that's iron ore and energy stocks. And yeah, when you think about it, it's all about those at this stage. They're doing really well on the market with the pricing of energy going up. That's great for gas. That's great for everything that we have here in this country. And it's smashing it. Look at it go, 73.15. So it looks like it wants to close above here. It might even buck the trend of the rest of the markets, and things like the FTSE as well will do well off this. So as we mentioned, down here looked good. This could have been a take profit target, and I wouldn't cry if I took some profit off there. But if we do get another closure above here plus the weekly closure, then it looks like we're moving back up to 74.50. Again, I think stimulus, this September run into the October reality of what is going to happen with, of course, China. That's getting people excited, as we kind of expected. Let's move over to the US 2000. Now, this was also touch and go. We didn't quite close above the wick. 20 moving average here on the daily. Very significant level, as we mentioned. Weekly as well. Take a look at that right on the close. So we're back to the most traded zone up here. And it's really, again, will the bears get control? This is it. This is where the bears have to get control of the US 2000. And it's not just the US 2000. The Qs are the same, key level that we already had marked out. S&P is the same. The supply that's in here, plus we've got gaps now. This one's filled, so well done. That's exactly what we wanted to see happen. And now we've left one behind down here. And we've also got a decent chance that we could go down there based on maximum pain, which we'll talk about in a moment. So let's have a look at the futures just to break down this S&P. First up, the futures action. Where do we trade at this stage? Well, we're trading right in that supply. This is basically a 75 fib retracement of this whole thing, 75, 78.6. We know there's a huge amount of trade here. I've already marked it before. This is where we kind of were hoping the market would get to. We did think this was bullish. We did think here was, I liked here as a partial take profit and here as the final take profit. And at this point, the bears have to get control of this market. If this thing goes too much like a 45.40 or a 45.50, it's probably going to make a new high. So it's kind of time for it to listen to some of that data and hopefully get a turn. Can we break down what we're looking for in the next 24 hours, though? The structure was pretty poor. So here is some of the structure concepts that we have. So first up, we do have a little bit of some lows that we could mark out, but they're all kind of sketchy. And I think the only ones that we could probably mark at this point would be maybe we could mark out something like this one here, which is at 4,500 flat, because it's also a psychological number. So if we take 4,500 and we stay around here and we start to see sell-off during the session, then that could can cause continuation. And of course, then where do we go for maximum pain? Well, we'll refresh that in just a second, but we'll move over to Bitcoin. That continues its strength upwards, which we did expect. So we expected here. We thought this might happen, so it has. And we're kind of looking now for ideally like a 27.4 to a 28,000 on Bitcoin after that move. So again, Bitcoin's done a little switch. I don't know if this is the low for it, but certainly it's a point where I could still see buyers trying to commit themselves to this. Let's refresh maximum pain together to get a bit of an idea of the SPY for the Friday. So first up, we've still got a max pain at 440 in terms of puts and calls. You can see here that 430 was never going to happen. A bunch of 440 puts were closed. Calls at 450. So I expect the market to try to hold below 450 for Friday and stay somewhere between 440 and 450. Now, that would mean that we could be moving into some sell territory. It wouldn't be too bad the market, the problem is it can easily go 460 and I don't think they'd really care. What they're never going to do is push it past 430, but that's not going to happen in 24 hours anyway. So we probably stay within this range, most likely based on options themselves, with something like a 445 being the sweet spot to 440, which of course is very close to maximum pain. So watch for potential weakness through the Friday. The data says so. The price action has not confirmed that, and ultimately we have to react, not predict. So this just helps us gain confidence in certain things, and we'll find out whether that does happen. As we mentioned, it's really been all about some news this week, but it hasn't been positive, yet the markets have still liked it. Empire State Manufacturing Index does come out Friday, plus prelim UOM consumer sentiment. Then we have the options expiration themselves. So make sure to check it all out. Stay on top of things. If you're also interested, remember we do have our conference on. It's next weekend, actually. So it's all happening very, very soon. And if you're interested in attending live, we still have a couple of session tickets. Premium access would have to be bought pretty quickly because otherwise we will have to let everybody know the final numbers. And virtual attendance, you can buy that up to the event. So that's where we live stream. If you enjoyed everything, make sure to subscribe. Smash that like button, guys. We'll see some of you in Vegas and in America very, very soon. And thank you very much for your support as always. Have a great day. Good luck out there. Pretty tough week. Definitely a lot of trapping on the markets. And hopefully we get some direction soon. So we're still in a bit of a tight range here on the S&P. Thank you and bye.